In this video, I want to talk about and explain you how to manage your portfolio, your spot portfolio. We are not going to talk about trading from a trading perspective. We are going to talk about from a long-term investment and spot portfolio perspective, and how to manage your crypto portfolio between cycles, because as you should already know, crypto assets move around cycles, okay, economic cycles, and also the internal cycles that this ecosystem has, and how you should approach, let's say, your manage your capital, and how much stables you want to have, how much crypto do you want to have, how to rotate between crypto assets, because the liquidity rotates within the cycle. We have different stages in every cycle, and you want to rotate your liquidity, or let's say your holding, the assets that you're holding in this cycle. In the different parts of the cycle, you want to be in one asset or another to have a better performance and to get the better out of the market. So before jumping into the video, I tell you that this is not investment advice. So you want to do your personal research or your own research about all these topics. I'm just going to explain you how I'm doing this from years now, and it's playing out well for me. And as I said before, this is not from a trading perspective, it's just from our investment or long-term view perspective. I have another portfolio just for trading, and this is my spot or long-term investment portfolio, okay? And that's how I manage my portfolio. Before explaining the video, I encourage you, as always, to follow me on Twitter at trading_soldier, where you can find a lot of posts that I post explaining my trading ideas, or my news on the market, or my entries, my exits, and how I view some altcoins, Bitcoin, Ethereum, and other crypto assets. And also, if you want to learn for free how to trade crypto better and how to become a better trader, you can visit my website trading-soldier.com, where you can find a lot of free tutorials, as you can see here on the homepage of the website, and you can learn a lot of things, a lot of trading strategies, and a lot of let's say trading concepts that will be a lot of helpful for you. Here you have all the social media that I have, so you can follow me there, and also my referrals on TradingView and Trading Light. So let's begin with the video. So first of all, the first concept that we have to get right is that we are not going to make wise decisions if we are too invested in the market. Let me explain. If I have 100% of my net worth in crypto, invested into crypto, I will be very emotional because I don't have any other money left. If my car broke down, if I need an operation, or let's say I have a health issue and I need healthcare instantly and I need money for this, so I will be very, 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 very emotional about the changes that my portfolio will have. So I don't want to have 100% of my net worth on crypto, okay? So I want to have let's say, one part of my net worth in fiat in my bank account to pay my bills, to be able to afford let's say, a living, let's say the rent, the car payments, the mortgage, the food, let's say the inconvenience that I can have. Maybe the car breaks down, I got a flat tire, I need a new computer, okay? You have to have, let's say, a cushion to be very easy with your money, and you need to have your money in your bank that is not for investment. Then you need to put another, let's say, chunk of your money into investment if you want to invest into crypto. And what percentage is right? For me, I used to have 30% of my net worth as liquid in fiat for everything, and the other 70% is invested into crypto, okay? This is very, let's say, subjective, because this depends on your risk tolerance. So if you are let's say a person that is risk adverse, you don't tolerate very well risk, I encourage you to lower this percentage. Rather than have 70% invested into crypto, maybe you will have to be invested 50% or 40% and have a lot of fiat in the bank to be more sure, more stable, and you want to be more, let's say, zen, or have much peace of mind about your money. But if you are more risky and you have certain objectives and you want to attain or to, let's say, to get certain goals in your life and have better money or put your money into work, as I do, I increase this percentage to 70-80% sometimes. And I always have a reserve in my bank to, let's say, as I said before, life happens, so we need money there, and it's let's say very responsible to have all our money invested, okay? And also, if we have children or we are married, we have obligations and we need money at our disposal. So this is the first thing that we want to have clear. And as I said before, the more you are invested in one thing, the more emotional you are going to get about this thing. Even I'm talking right now about our personal crypto portfolio or investments, but also if you invest a lot in your company, a lot of emotions, a lot of money, you will be affected a lot by the outcome that you get out of your company. Or also you invest a lot with a relationship with a woman, with your wife, or with a friend, okay? The outcome of this relationship or that relationship will affect you more, okay? So this is not just for crypto, it's also for life in general. The more you invest in a thing, the more it will affect to you emotionally and personally and in other areas of your life. So having in mind that, once you have decided what kind of percentage, as I said before, for myself is 70-80%, okay, and 20-30% in fiat, okay, then we want to switch to our actual crypto portfolio, okay, and we want to decide how much we want to have in BTC, Ethereum, in Bitcoin, Ethereum, and altcoins, and also with stables. So this is also a very tricky part, because as a crypto investor, you always want to have Bitcoin in your portfolio, Ethereum, and also many major altcoins. But also how much stable coins as USDT, Tether, or USDC Circle you want to have in your portfolio. For me personally, I never have less than 30% of stables, because even if we are in a bull market or even if we are in a bear market, there will be always opportunities to buy lower. So if I spend all my stables in one shot and I 100% invested in crypto, if we have a dip or the market nukes, we are losing an opportunity. And the markets will always give us opportunities to enter at lower prices, okay? Markets, as we should already know, doesn't go up in a straight line and doesn't go down in a straight line. Markets are, let's say, waves. As you can see here, for example, is more like a sinus wave, okay? So you will always have opportunities to buy high, to sell higher and buy lower. So that's why I always want to keep at least 30% of my actual portfolio that is invested into crypto. I want to have always 30% to sleep very well and to don't be afraid to, if tomorrow the market nukes 10%, 50%, okay, I will be able to buy lower and, let's say, have an average entry point, a better average entry point into my positions on Bitcoin, Ethereum, and altcoins. So saying this and having, let's say, clarified how much stables do you want to have in your portfolio, that for me is never less than 30%, even if we are in a bull market, okay, because as I said before, the market always will give better entry opportunities, okay? even if there is a lot of FOMO, even if the market is going up like crazy, there will be always a dip or a better entry that you can, let's say, take advantage from, okay? And now, if we talk about the Bitcoin, Ethereum, and other alts that I will hold, first of all, we have to have in mind that Bitcoin and Ethereum act as an overall index of the crypto markets, such as S&P 500 and Nasdaq does in the traditional markets, okay? So you should view Bitcoin and Ethereum as an index from the overall crypto markets, okay? Such as S&P 500 and Nasdaq. And you should view the other altcoins, such, for example, stocks. Let's say, for example, we can see Solana as Tesla, for example, or we can see, let's say, I don't know, Microsoft as Monero, and we can see, for example, I don't know, Berkshire Hathaway, we can see it as Litecoin, okay? We should see every altcoin such as an independent company or independent project that we have to be invested, but we don't want to have all our money in one stable coin, in one altcoin, because altcoins, as we should already know, are very, very, very volatile, and there are a lot dependent in, let's say, liquidity, market cycles, and also in the fundamental, let's say, basis of this project. So if a project, DeFi project, gets hacked and you have invested all the money in this altcoin, okay, in this DeFi project, for example, you will lose a lot of your capital. So one common mistake that a lot of people that invest in crypto do is that they invest all of his liquidity, okay, all of his crypto portfolio in one altcoin. Yeah, indeed, if this altcoin pumps, you will get a better reward, but the risk is also higher, okay? So this depends also in your risk tolerance and your personal, let's say, situation. But if you want to equilibrate and have, let's say, a portfolio well balanced, you need to have 30%, 25% of stables, and then the other things, the other crypto that you have, mainly you should have Bitcoin and Ethereum and a bunch of alts. For me, this basket of alts should be, they are Monero, Cardano, Polkadot, Kusama, Chainlink, for example. This is the main alts, also Litecoin, for example, that I want to hold. And not always, for example, Bitcoin and Ethereum, I want to keep them in my portfolio, in my wallet, in my cold wallet. But from the alts, okay, if I see, for example, that we are heading to a bear market, I will trade them. Also maybe Bitcoin, Ethereum, if I see that the price has risen a lot and I done a 5x, 10x on my initial investment, I will get rid of this, and maybe I will switch to a 20% investment in crypto and as 80% in stables, okay, to buy lower if I had done a big return on my initial investment, okay? So these percentages vary and may change depending on the part of the cycle that we find us, and let's say on my personal entry point, because if I had a very low entry point and I have a very average entry price, I will get rid. If for example, if in Bitcoin, if I do 8x, 5x, 4x, maybe I rethink my investment. And if I see that the price is retracing, maybe I want to get rid of this position and I want to swing trade a little bit, okay? And I want to switch all my crypto assets into stables and then wait a little bit and buy again Bitcoin, Ethereum, and alts to replenish all my crypto portfolio lower and accumulate more units of this Bitcoin, Ethereum, and major alts, okay? This is more... I know that I say that this is not how to manage a portfolio from a trading perspective, but if you hold altcoins no matter what, or you hold Bitcoin and Ethereum no matter what, you will, let's say, lose a lot of potential to accumulate better entry points, to get better entry points and to accumulate more units of these crypto assets. So depending on the market cycle and the market conditions and the, let's say, the particular performance that these assets has done in the past, depending on my actual entry point, I will decide if get rid of them and switch more to stables, or to increment my position and to lower my stables and have a better, greater exposure in Bitcoin, Ethereum, and altcoins. This is my personal approach, okay? As I said before, everyone has his personal things, and this depends a lot of what I see in the chart, okay? Then the other thing that I find a lot of, let's say, importance to know is how liquidity works in the market, okay? So as we know, let's say, here we have the Bitcoin US dollar chart, and every green line that we have here is one halving, okay? We see the halving on November 2012. We see the halving in July 2016. And we see the halving on May 2020. And now the halving on April 2024, okay? So we see that Bitcoin moves indeed, as I said, in cycles. He is, let's say, an equilibrium point. He's let's say, consolidating an area, then it expands, and we are heading after the bull market. After the halving, we have the bull market. Then we have a bear market. Then another time we are going sideways. Okay. Then again the halving happens. Then again we explode. We have an expansion. Then again bear market. Again sideways. Then again explosion, okay? And these cycles repeat within the time. And now we are heading into the 2024 halving. So here, okay, here you want to accumulate, to buy. Here also in the beginning you want to buy, this is a continuation, but then you want to get rid of your position, okay, here, to sell. And when you are selling and not buying or not going also short, you are net short because you don't hold these assets. And then you wait into the bear market, or you position short to increase your portfolio, let's say. Here you begin to accumulate again units of Bitcoin, and then here you hold, you sell into the pump, and then you wait again, or you go get short, again accumulate. And this is how this plays out within all the market cycles. But you have to understand that this is the market cycles of Bitcoin, because it's the major cryptocurrency with the most market capitalization. But you should know that Bitcoin, as the main cryptocurrency, the liquidity, when Bitcoin pumps, Bitcoin dominance increases, okay? Usually it increases, and let's say the total 3, or the total market cap of the altcoins, and also the total 2, that is altcoins including Ethereum, they are decreasing while the Bitcoin dominance is rising, because all the liquidity is switching into Bitcoin, because it's the most, let's say, is the king of the crypto ecosystem. And then when the Bitcoin dominance is high and Bitcoin price is high, okay, the liquidity switch into Ethereum. When the let's say when the Bitcoin dominance begins to decrease, okay, the liquidity should be switching into Ethereum. Then when Ethereum has pumped, the liquidity is switching, the profits that the people had made switch into major altcoins, as I said, Solana, Cardano, Polkadot, okay, Monero, okay, the major altcoins. And then when those altcoins had pumped, the liquidity is switching into low caps, shitcoins, and meme coins, okay? This is usually how it plays out. And then the cycle begins again. All these profits rotate again into BTC, and then and that causes that the BTC dominance, the BTCD, increasing. So then Bitcoin pumps again, it's holding more market capitalization, and then when it's pumping, the Bitcoin dominance is increasing, then begins to decrease, and all these profits that Bitcoin generated switch into Ethereum, and then the profits that Ethereum generates when it's pumping switch into major altcoins, and of these profits go into the meme coins, low caps, and also shitcoins. So this is how the cycle plays out most of the time. But you should be aware of on BTC dominance, that is this chart here that you have here, okay? The dominance of BTC. This is very important to get into positions in altcoins or in Bitcoin, okay? So as long as Bitcoin dominance is high, you want to be in Bitcoin. And when you see that the Bitcoin dominance is decreasing, you want to switch into altcoins, because this means that the liquidity in the crypto market cap is rotating from Bitcoin to Ethereum and then to altcoins, okay? So Bitcoin is having, let's say, less share of the market, okay? Sorry here, because okay, I want to show you this again. So that's the 3 points that you have to have in mind if you are building your crypto portfolio. First of all, how much fiat you are comfortable holding in your bank to your actual life, how of your net worth you are willing to invest into crypto, okay? And then when you are invested into crypto, how much of your portfolio are you comfortable holding into Bitcoin, Ethereum, and altcoins, major altcoins? I'm not talking about lower caps or shitcoins here, or meme coins. Very reputable, let's say, projects with good tracking, good fundamentals, and good, let's say, future perspective, okay? And also how much stables you want to have in your portfolio. As I said, for me, I never have less than 30 to 25%, because market always will give us better opportunities to entry in the market, okay? And also, other thing that you have to have in mind is how Bitcoin and Bitcoin dominance affect to Ethereum, major altcoins, and low caps and meme coins, and how this cycle repeats everything. When BTC is decreasing, the liquidity is dripping from Bitcoin to Ethereum, then to altcoins, and then to meme coins, and then again it switches to low caps to Bitcoin, okay, when the Bitcoin dominance is increasing. So this is one thing that you have to have in mind to build your portfolio. And also, as I said before, you should be looking at Bitcoin dominance always to build your positions in Bitcoin, in Ethereum, and also on altcoins, because this is like an oscillator, Bitcoin dominance. And when Bitcoin dominance is very high, and is approaching a resistance or let's say a very high level, maybe you want to enter a position into altcoins because you predict that the Bitcoin dominance will drop, and then the liquidity will switch to Ethereum and major altcoins and low caps and meme coins. Okay, so this is the cycle. I hope you understand it well. If I'm mistaking something here, please leave me a comment and we can discuss it. And also, as I explained before, how to build your portfolio, having in mind the halvings in Bitcoin, because Bitcoin is the major cryptocurrency where the most market capitalization is, let's say, concentrated. And as we should know, Bitcoin have every 4 years we get a halving where the emission of the token gets reduced by half. So this, as you see here, increases exponentially the price of the asset. Okay, as you see here, the waves here are low volatility waves, higher volatility waves, higher volatility waves, and we expect here even higher volatility waves. Okay, so this is how Bitcoin reacts to every halving. Now we are in this white box because the halving didn't happen yet. We are here in this white box. So the expansion move of the bull market is not happened yet. So in theory, right now we are at 13 November 2023. Is a good point to start accumulating Bitcoin, okay? To start buying Bitcoin, building your position in Bitcoin, to then, let's say, heading into the 2024, let's say, bull market, okay, have your position build up, okay, and expect a higher or greater volatility here, okay, and get an expansion. Let's say, for example, now we can get a dip, and then here, let's say we're going lateral, accumulating, and then boom, expansion, as we had in the previous cycles, okay? As you see here is going sideways, and then after the halving, it goes sideways a little bit, and then expansion move, okay? So you should have this in mind when you enter to invest into crypto, because this is how it has done Bitcoin in the past, and usually history, it not repeats, but often rhymes. So now we should expect that Bitcoin should or retrace or go lateral, go, let's say, sideways for a while, and then after the halving, 2, 3 months, 4 months, 6 months after the halving, Bitcoin should explode and get an expansion move that we call bull market, okay? And with this, all the liquidity will be, let's say, pushing even higher altcoins and Ethereum and other shitcoins and meme coins, as I explained to you here. So this explanation that I have done to you needs to be complemented with this chart that I posted here, okay? This explanation alone is not viable or is not applicable if you don't have in mind how Bitcoin performs within halvings and how the phases of every cycle perform, okay? Because if you buy here into the red rectangle here, you are going to get direct because you are in the bear market, okay? You want to buy here, you want to build your position ideally into the, let's say, the consolidation or accumulation phase here before the expansion of the bull market. Then after the bull market kicks in, you want to sell and wait or position short heading into the next bear market, okay, to take profits or to don't lose money here, and you again want to build your position before of the next halving, okay? So as you see here, now we find ourselves into the position of building our Bitcoin positions heading into the next halving, okay? Also, another let's say image that I want to share with you is this, that as I said before in the chart, these market cycles, let's say, move like in waves, okay? So the first wave you can buy, then when you have expanded, okay, you can sell, then it's going lateral or down for a while again, okay? You can see that it has a correlation with a sinus wave, okay? So maybe this is confusing you, but I think that is more graphical if you want to see, because here maybe you have understand it, but in this image here, I think that is more graphical, let's say, from the point of view of waves, okay, that the market always is waving up, down, okay, as even if Bitcoin is trending higher, okay, it's always waving up and down, okay? So this is one thing that you want to have in mind before entering your position into Bitcoin or Ethereum or other altcoins. You have to be aware on where of the market cycle you are in, okay? So this is very helpful, okay? Also counting the days with every phase of the market is taking to play out, okay? Because maybe you have 300 days or 200 days that have already passed into the bull market, then you have to begin thinking about selling depending on what the price has done in the past, and then maybe you are entering into a bear market. So you need to be aware on exactly where you find yourself in the market cycle, okay? Because this will depend a lot how your behavior will be, okay? Because you want to position long here, also long here you want to position short or net short, and here again long, okay? So this is very important to have in mind to let's say approach how we interact with the market, okay? So that's it for the video. I know that it's a long video. As I said before, this is not investment advice. This is my personal experience, my personal let's say, how I manage my portfolio personally. This will depend from every person, your risk tolerance, your personal situation, okay? And I encourage you to do your own research. Know that the markets are here to take out your money, okay? Not to give you money, and they will play a lot with your emotions, okay? So before entering into investing into crypto, please do your own research. Know what you are dealing, okay? You are dealing with a very volatile and unregulated right now market that is merciless. So never put money that you are willing, that you are not willing to lose, okay? So you need to think in your mind that when you are putting $10,000, $50,000, $100,000 into crypto, you are willing to lose this money. It's like you are going to ditch this money into a river or into the fire, okay? Maybe you will lose it all. There is people that lose it all with FTX, bankruptcy. There is people that lose it all with Luna or Terra Luna crash, okay? This is the way it works. Nothing is 100% guaranteed here. So you need to have the mentality that when you put money into crypto, this money is gone. From now it's gone. If it does 10,000x from here and you become a millionaire, okay, very well, but you can lose it all. So never invest money that you are willing to lose, okay? Because your decisions will be affected, okay? Because you will be a lot more emotional when the price goes up and down. You will be more, let's say, you will have a lot more of greed. You will be a lot more greedy, or also you will be you will have a lot of more fear, or you will be a lot fearful to lose your money if the price is going down. Okay, this is the two main emotions that play out here in the trading or on the investing: the fear and greed. And you need to understand how to manage this. And obviously, if you are too invested and you have a lot of money here, you will be too invested also emotionally. So the outcome of your investment or your positions will affect you a lot, and your decisions will be a lot more influenced by this emotionality. And you want to avoid that. You don't want to get emotional about your investments, because that will cause to worse or bad decisions. So as I said in the beginning in the video, I encourage you to follow me on Twitter at trading_soldier, where I post daily updates, okay, about a lot of things, and you can learn a lot just from my Twitter, my free Twitter here. And also I encourage you to visit my website, trading-soldier.com, where you can learn a lot that I post here, because I'm, let's say, compiling on all my knowledge and all my views on the market, trading strategies here as a guide for myself. But I also leave it for free right now for you to, let's say, learn and to take advantage from this, because when I begin into crypto, I don't know nothing. I don't knew nothing. I was a newbie, and I wished in the past to have someone that explained me how the market works, what are the best trading strategies, and this will, let's say, save me a lot of headache and a lot of money. And now I'm becoming the person that I wanted to find when I was a newbie and I was getting into crypto. So if you are new here, maybe I'm this person, maybe I can help you, and this is a good, let's say, I'm building good karma in my life with this, okay? So thank you for your time, for watching this video. As I said before, leaving me a comment about your thoughts, your comments on this video, what you think, you will do it differently. Let's discuss in the comments, and we see you on the next video.